Hello everybody, welcome to Beat the Market. Today I'm going to show you how I personally do technical analysis before I take a trade. Okay, this is going to be my process that I will share with you guys and hope that you guys will gain something out of this video and become a much better trader than you ever was. And let's get it on. Also keep in mind that I will be having timestamps in the description below if there's different subjects that you guys like to specifically hear that I speak about. Okay, so let's get this started. Okay, so the first thing that I want to identify is, besides the ticker and the time frame that I'm using, is what is the trend. So we're going to use the DIA, the Dow Jones, as an example. And right now, judging by my moving averages, I am using the 13-day, 5-day, 50, 200, and the 20-day moving average. Okay, this is on the daily chart. And when I see it stacked on top of each other like this, the red one is the 5, green is 13, yellow is 20, orange is 50, and all the way down here is the purple one, which is the 200-day. When I see it stacked above each other just like that, that tells me that we are in a bull trend. So because we are in a bull trend, I will be looking for buying opportunities. If we were in a bear trend, I would be looking for selling opportunities. Okay, so remember, what's the rules? You want to buy at support and sell at resistance. Okay, so the first thing I need to do is identify my areas of value. All right, so let me move these moving averages, because now I know that I am in a strong bull trend. So first thing I want to do, just using this area right here, I want to identify my areas of value. First thing is, where is support? Okay, so I will get my line right here and I will look for support. Support, we're going to need multiple touches. Okay, we see multiple touches here. Pow. All right, see multiple touches here. Started right here. We've got multiple touches. Boom. All right, let me move this one for now. This one's a little lower. So okay, we got a range of support right here. Okay, got touch there, touch here, touch there. All right, now we want to find resistance, and resistance would be right here. All right, we got some multiple touches here, here. Okay, now think of support as the floor where the price actually could possibly bounce from, and think of resistance as a ceiling where it could possibly get rejected and come down. All right, that's kind of the idea here. All right, so now that we got our support and we got our resistance, we can see that the Dow Jones was trading within a range. Now we want to identify our area of liquidity. All right, it's very important we identify the area of liquidity. Now, what is the area of liquidity? Well, areas of liquidity is basically where retail traders would be clustering up their stop losses. So these support and resistance level are purposely created by the composite man, by the market makers, by institution, by hedge fund managers, by whales. Okay, they're purposely set up. You guys, I want you to learn how the market moves. It's not retail traders that move the stock. Okay, when we see these green and strong move up, we're thinking the bulls are buying. Well, guess what? Somebody is selling to them. Somebody is fronting the liquidity, the money, to allow the retailers to buy in and get prices moving up to they want. Okay, all right, we are not, the retailers are not the market movers. We are not the market movers. Okay, so smart money allows it to get pushed up to this. They are purposely creating these support and resistance level. So because we know this, we have to identify our areas of liquidity. So based on the structure, where would our retail traders, our fellow retail traders, could probably set their stop loss? Based on the support, they would set it up around something like that. Okay, so this line right there would be the support, And this red zone here would be where the areas of liquidity is, where our stop losses could be clustering up. So as you can see, the market maker set us up beautifully here. They got set us up with a stop support here, resistance there, come down to test our support to show you that it's support. It goes up, come back and test the support to show you it's support, and it goes up. Okay, and then it comes back down, coming back to support level. Now when retail traders see this, what do you think they're going to think? They're going to think, hey, I want to enter at support, which was at 335.25, right? Because they're expecting it to go back up. So when they enter, what happens? They're going to set their stop losses just under the support level. They will trade based on the structure. And guess what market makers do? They break the structure on purpose right here and taking out all the stop losses from these previous tests of support here. Okay, taking out all the retail traders that was going long. And what do they do the next day when retail traders start to think bearish? Because now we're getting some breakout traders that are betting to the downside. All right, they take out the stop losses of those who are bullish, and then they pushed it right up the next day, screwing over the breakout traders that was betting to the downside. Pushed it right up. Okay, institutions, guys. Now usually when you see a false breakdown of support just like this, the next move is usually very strong, whether it's from the downside or to the upside. In this case, it's from the downside heading up. And what happens? It pushed it right up to support, got rejected, came right down, and it lingered at support, started flagging at support. Okay, so just like the area of liquidity is down here, there's an area of liquidity up here as well. Okay, this red zone is where market makers will look to hurt or potentially hurt the stop or take out the stop losses of those who are trying to short this to the downside. Okay, so what we have here is this first breakout, this first candle right here. That is the first candle that broke out, that broke the resistance. And what happened? Anybody who shorted thinking it's gonna get rejected again here, all their stop loss got taken out. Okay, so after stop loss gets taken out, that will draw in the what? The breakout traders who are bullish. And what the market makers do the very next day, they pushed it right back down into range. Because if they entered at the breakout, where would the breakout traders set their stop loss? Just under that, right? So now their stop loss is here in this red zone. And then what the market makers do, they pushed it up the very next day. Okay, so that's why it's important for us to understand where is our areas of liquidity, where are our fellow retail traders setting their stop losses. Remember, when it comes to retail traders, there is a 90 to 95% failure rate. Okay, so we do not want to follow our fellow retail traders. That's the dumb money. No offense, guys. We want to follow the smart money. Okay, so next, now that we identify areas of liquidity, we identify our support and resistance. What do we want to identify? Is there any patterns? Do we see any patterns? Okay, now all I see is this Dow Jones was trading within a range, and that's finally starting to break out. As you can see, this is real time, guys. Dow Jones is starting to break out. You see this big strong green candle, it's breaking out. Okay, I think it'll hold. We'll see. This is not technical analysis. It's me teaching you guys how to do technical analysis. So, are there any patterns? Well, I see a low here and a higher low there. So we see something forming. Of course, I like to add that area of liquidity there. Okay, I'm going to change the color so you guys don't get confused. I'll put it to orange. Okay, so we got a pattern here, some type of triangle pattern, ascending triangle, of course, right? was going here. All right. We have an ascending triangle, but obviously it's starting to break out. Okay, so that's what we want to do. We want to identify where is our support level, where is our resistance level, where is our area of liquidity, where are there any patterns. Okay, even within the pattern, there are areas of liquidity. Like if it came down to here, they're setting up a nice support level. They could come back down, thinking everyone's gonna go back up. The price action will head back up off this bounce here, but then they'll push it even lower into an area of liquidity right there. Okay, are you guys understanding? All right. So, like I said, this is a bull market. I will be bullish and I'll look for buying opportunities. If it's a bear market, I will look for selling opportunities. Okay, so with the Dow Jones, this was a strong bull market and it looked like it's starting to break out now. Okay, so I would have looked for buying opportunity. Here would have been an entry for me. Okay, because I already saw that the support level was getting tested multiple times, so I knew they're gonna trick us. So when you see it 2 to 3, maybe or more of support getting tested, it's most likely gonna be a false breakdown or a false breakout. Okay. Now, as far as this support level right here goes, if Dow Jones does come back down, I will not look to enter right at the support level where the orange line is, but where the orange zone is. Do you guys understand? So I will look to enter when the market makers look to enter. That is my strategy, and that is how I use my technical analysis. All right, guys, I hope this was able to help. I'll see you soon.